in and look at some of the measurements we're going to do on the individual days. Now, these levels will be, in my mind, going forward based on the previous swing. Okay, so now we have our chart back the way it was before. Looking at those projections. Now we have Sunday's opening here. Market drops down. Again, I've already mentioned in the weekly bias video, I'm not really concerned about Monday's trading. I want to see if I'm bullish, a move moving lower on Tuesday. So now we can take a look at some of the measurements in addition to and see which ones line up. So the bulk of what I'm going to teach you here is an overlapping or confluence of Fibonacci levels in the form of extensions. Okay, so right away we have this high back here that price has been moving lower from. What I want to do is incorporate that with a projection from that low here on Tuesday up to the highest body open or close here. And I got to put this actually a little bit, there you go, right there. So I'm looking at the body to body in this price swing. Why am I measuring this? Because what I'm looking for is the movement lower to pick up buy orders, and then once this high is taken out, how far up will we reach into in terms of price objectives? Okay, so and then I start looking for overlaps. We're kind of close with this target 2 to this one, but not that close. But then we have this level here, and this is where a little bit of thought is going to have to come in, because on the larger price swing we did when we scrubbed over to the left side of the chart and we drew those horizontal lines across, we have one target here and then another target here. But look what happens right in the middle of that. We have this level here. So target 2 lies directly right in the middle of that. So that's like an equilibrium concept. Right away I see that and that draws my attention. So I'm going to draw now another horizontal line right here, and I'm going to change the color of this one to delineate why I'm drawing it, because this is all going to be based on this price swing and everything to the right of it. And you'll see what I mean as I go. So now I want to take another measurement of this open or close, highest one in this swing, keep it anchored to here, and see if there's any measurement up here that has a confluence. Again, this one's a little too far away, but look how far away we are here to what I just did on that equilibrium. So right away, this is another confluence. Now, how far away would I be willing to allow price to move? About 10 to 15 pips, depending upon the type of market structure there is. But anything more than 15 pips, I'm not really willing to let that be deemed a confluence. If it can be less than 10 pips, it's even better. And in this instance, we have 1928, 1924, so we're less than 5 pips, real close. Okay, and I'll tell you how we can pick a specific level in mind once I go through all the possible swings. All right, so we're looking at not this level here. And the reason why I'm not going to use this price swing is because we have this low and this low here, and then we drop down. So I'm not concerned about this one. Okay, so I'm not interested in this swing at all. This swing is the parent price swing. This is a subordinate price swing within the overall swing from this low to this high. So even though we traded down, came back up, it really was of no significance. So this low to this high is much more significant. Now we can start looking at smaller price swings and the optimal trade entry here. Okay, so we have the lowest open or close up to the highest open or close in this price swing. Price comes down, hits the 62% retracement level, optimal trade entry, and we start looking for extensions. Okay, we have the 300 extension within, again, less than 15 pips. So now we have another confluence right there. And now I'm going to measure every price swing that moves lower. So every price swing down, I'm going to measure that. So it's this one here. It's going down, picking up orders. Why am I looking for that? Because I'm looking for the expansion up the upside. Now watch, look what happens. Now we start seeing an overlap here. So we have one confluence here at that level. And we also have another one right here with the 500%. Okay, so you can already start seeing the grouping that's occurring right here. This little price swing here, why is this significant? Because it comes down and takes out an area of short-term low, where but this is catching my eye. This would have caught my eye if we started breaking higher. Right away, I'd be looking for the highest body, the close. I'm sorry, the highest and lowest open or close relative to each swing high and low here. And I'd look for another extension, and we don't need to draw another one because it's right on here. It's 200 extension. Okay, and there's really no confluence that need to be drawn here. So we can see that there's room to justify this level here. This would be a target, but we have a lot of grouping right up in this area here. So now what I'm going to do is I'm going to take that and just highlight it. Now I don't draw these boxes on here or these rectangles when I'm doing this. I look for just the levels, and I can start keeping an eye on where they're starting to group. Now once we have an area where they start to converge here and then over here, right away we're below that price level as we're coming up. So this is going to be a nice objective to reach for, which is basically the 119 big figure, because if you 118.98, you can go 2 more pips just with just a spread or chaotic price action would take us right up into that 119 big figure. If that trades through, then we'd be looking for an area in here where all these overlaps start to take place. So now I'm going to take all of the horizontal lines off to make it a little bit cleaner. And we can see that the lowest point that level confluence started was 119.24, and then we have the highest point comes in at 119.35. So you're stuck with the decision rather to go with what level are we looking for. And here's your choices. You can be conservative and get out at the 20 institutional level right before all those confluences agreed. You can get at 119.25. You can get at 119.30 round number, or you can hold for 119.35 because there are 5 levels, 0 levels, and obviously the 119.20 is institutional level, waiting for the confluence of target 2. So this is target 2 on that price swing we had relative to this swing here. So all I'm doing is measuring all of the possible overlaps of the Fibonacci and looking for an agreement on a specific area. Then I'm either picking a 5 level or a 0 level. The closer I can get to an institutional level, the better. Truth be told, 119.20 would be my level, and I'd look for that only, and I would miss out on all the remaining portions.